it's certainly unprecedented situation that we find ourselves in. So I think the chair is trying to convey that there's a lot of uncertainty around the outlook. And frankly, my view is we're really at early days here. It's hard to assess things. I think a reasonable outlook at this point is that we could see, as the economy starts to reopen and activity picks up, some improvement over the second half of the year. But at the end of the year, still we're going to have output below the level it was at the end of last year. And we may see the unemployment rate come down, but it's still going to be in the double digits or maybe high single digits. So I agree that that's a reasonable outlook, but a number of things would have to fall into place for that to happen. And an equally, almost equally probabilistic outcome is much more dire than that. So right now we're in this situation where we really want to make sure that we're doing all we can, certainly at the Fed with our tools, right, to make sure that the economy is in as best a position it can possibly be in when the recovery starts and we see an increase in activity. I think it's early days now. I think we're going to need more support from the fiscal side of things because this shutdown period has gone on longer than I think anyone anticipated in the beginning, and there's just a lot of pain out there.
Let's leave aside the fiscal side of things, which I understand what you're saying, and I understand what the Fed chair said about that. What about the Fed? Is the Fed doing all it can right now to bring about the best possible outcome that you can predict from this?
So we're doing a lot with the tools that we have. So, for example, we have a number of facilities that we've set up in terms of 13.3 facilities, which, of course, are allowed under the Federal Reserve Act, the Section 13.3. Some of those are operational. Some of those are still being set up. And in the announcement for the Main Street lending facilities, which is yet to come online, but it's being set up as we speak, right, we've said we're looking at the nonprofit sector to see if there's something more we could do there to support that part of the economy, because that's another important part of the economy. So we're using our tools. We've used some of the tools that we used in the last financial crisis. We've innovated and have other tools. Again, we're trying to help, right, really bridge over this period where there's a shutdown in economic activity so that we're helping households have credit. We're making sure that businesses of all sizes have credit flows, and we're making sure that municipalities have flow of credit to them. That's an important component of this. And then the fiscal policymakers have done a lot as well in terms of trying to get direct support to households and businesses and to the municipalities. So I think this is a multi-pronged effort. Sizable actions have been taken, but at the Fed, we're always looking to see if there's more we can do with our tools to support the economy. And of course, once we get to the position of a recovery, then we'll continue to do more.